in one particular sector, and that is the IT sector. In fact, if we can pull up the IT index, you will see that it is currently trading very close to the low point of the day, down over 3%. And of course, you're hazarding a guess, but I think this guess is more or less correct, that sentimentally, whatever is happening in the US currently in terms of the data that has just come out overnight is not necessarily the best news, because over there you have traders and you have market watchers, you have economy watchers that are dialing back expectations of rate cuts by the Federal Reserve. They meet, of course, next week to decide on rates. And that's because the economy, while it's not doing incredibly well, it is proving to be resilient. And as a result of which, the inflation picture not having evolved to the extent that the Fed can very comfortably cut rates, you are looking at the possibility of rate cuts moving further down the line. And that's not necessarily the best for spends related to IT, which have been languishing a little bit in the recent past. So that is more or less why you have a sentimental impact on the IT sector. Apart from IT, you have a few other sectors that are underperforming in trade today. And you have FMCG that's down about 0.8% or so. You have the Nifty Finance, Nifty Auto that are losing a little bit of ground. In fact, the Nifty Bank, not sure where it's headed. Pull up the intraday chart on the Nifty Bank and you will notice that at one point it was actually higher and it has given up those gains. It's currently trading flat with a negative bias as things stand right now. Let's see if that changes towards the end of the session. But you have pharma, that's the only sector that's very strongly trading positive with gains of about 1% or so right now. But there's one stock that I'd like to focus on at the start, and that's Larsen & Toubro, which is gaining quite handsomely on the back of earnings. By the way, I didn't mention Cipla is the stock that is gaining quite considerably in the pharma pack, and that's on account of a positive development for one of the drugs that they have in the oncology segment. That stock is up as much as 10% right now. Treating pancreatic cancer, it's a positive development for their Goa facility. Larsen & Toubro, I was talking about that. It's up about 7% and at the high point of the day. And that's because the results have surprised positively. It's beaten on the top line, it's beaten on the bottom line. And in fact, despite the fact that there has been an erosion in the margins and lower orders from the domestic market in particular, the street is looking very happy with this stock. Let's find out why. Anushi is joining in. Anushi, essentially it's about the fact that the book-to-bill is looking very, very strong, despite the fact that you have orders that are not flowing in as quickly in the domestic side, right?
Alex, so let's just break this down. There are certain factors. One, as you mentioned, was the order inflow pipeline, which the investors were waiting for the commentary on that. While we'll go to that, before that, just Q2 numbers, if you have to look at revenue, PAT, clearly a standout in terms of performance. If we see the margins also, margins of 10.3%, however, they were lower than last year's. It was on the account of some monetization gains which took place last year. So it was a higher base which led to this kind of a margin contraction that we are looking at. Coming to the order picture, while there was a 10% of drop to 80,000 crore in order inflows this term, the pipeline going forward continues to remain healthy. Also, it is very important to note that in Q2 of last year, there was a 72% of a growth because of two ultra mega projects that the company had won in Middle East last year. So this is also on account of higher base that we are looking at. But barring that, the company has maintained its margin guidance for the year. They've maintained the 10% growth that they expect in the order inflows. So very healthy footing that we are seeing. In fact, the 15% revenue growth guidance also that the company has maintained. Most of the street is expecting it to exceed those expectations going forward. So Q3 commentary remains. Coming to the prospect pipeline, while that is at about 8 lakh crore, it has been marginally lower than last year. Execution remains as a key task for the company because and this will come from the international side along with domestic side. Do note, and in Q2 this time the domestic execution was muted, but it is expected to report a stronger stance going forward. Some of the key con call highlights also to be mentioned. Believe H to be a better half with large scale domestic ordering over here. Coming to the brokerages, most of the brokerages, be it Jefferies, Nomura, MK, they remain constructive on the stock performance because of the kind of execution ramp up that the company has made and the healthier order pipeline that we'll be seeing for the next half onwards, and see about a 20 to 26% of an upside in the stock going forward. So this is all that is happening in L&T.
Interesting. Thanks so much, Anushi, for laying that out for us. On that note, let me get in our experts for the day. We've got Mr. G. Chokalingam, who's the founder and managing director of Economics Research, joining in, and Ayush Mehta, technical research analyst at Nirmal Bang. To the both of you, thank you so much as always for taking the time. Always a pleasure having you on the show, and particularly today. I wish you both and your families and your team a very, very happy Diwali and a very prosperous one at that. Mr. Chokalingam, I'll come to you first. What did you make of the Larsen & Toubro numbers, and what is the upside that you see from this point? There are people that are saying, as Anushi pointed out, 20 to 25% or thereabouts upside from this point. Do you agree?
Yeah, certainly. In fact, we also have a coverage on L&T. We have given a target of around 4,050. The only concern is that IT segment is not doing that well. It is having a single-digit growth. And in the past, the IT segment used to contribute to almost 50% of the profit. Now it has become almost less than one-third. So that's the only concern. In case the war extends in the Middle East, that would be another concern, because it draws a lot of orders from the countries within Middle East or around Middle East. Otherwise, yes, it looks very good, because it is very difficult to see significant growth among many Nifty and Sensex stocks now. So from that perspective, yes, it's a buy. One can hope to get at least around 4,000 rupees.
Okay, very good. Okay, so it's a buy right now. I'll just very quickly take it with you as well. Ayush, Larsen & Toubro, on the charts, what according to you is the best level to buy? On the fundamentals, Mr. Chokalingam is saying it's a buy, but what are the best levels to accumulate?
Well, the best levels would be around 3,400 levels, but it's a little unlikely right now. Although it has given a fresh breakout of 3,620 and it is currently trading above that, I think it can move toward 3,800 if the market sustains. So definitely it's a buy from here as well, by keeping a strict stop loss of 3,570.
All right. I'm coming back to you on this first question. And by the way, if you're tuning in for the first time, this is to you, the viewer. If you're tuning in for the first time and if you've got a question for us, that number on the screen is where you send your questions to us. And Happy Diwali. If you would like to say Happy Diwali to us, then you can do that as well. By the way, if you're writing in for the first time, make sure you tell us your name as well as where you're writing in from. The first question is coming in from Arbind, and he's writing in from Ranchi in Jharkhand. He's asking about Bikaji Foods and whether this is a good investment or good buy for the next 1 year. Do you have enough data, Ayush, and would you suggest that this is a good buy?
Well, we have been bullish on Bikaji since quite some time now. We have been recommending Bikaji from 700 levels, went all the way up towards 1,000 levels. Although it is at the trendline support right now, and definitely it's a buy for the long term. Can hold it for now. I think you will see a new 52-week high in this stock very soon.
Okay. All right. We've got Rishi, who's got the next question. He's asking about a company, Concord Biotech. The stock is currently trading about 3% higher, and it is a 19,000 crore company. It is at 1,857 or thereabouts. And in fact, it is in the fermentation-based biopharmaceutical space. Any coverage on this, Mr. Chokalingam? What would you say about this particular counter? He's bought already, I believe, at 980. That's the average price that he's bought at. So he's comfortably in the green. In fact, it's a doubler for him. Would you suggest a hold for at this point?
Certainly, I looked at the company. It's fundamentally very sound. There is no doubt about it. Business model and fast growth. But I'm not comfortable at current valuation. If you look at EV to sales, it's more than 10, 12 times. So definitely the valuation comfort is not there. Perhaps this is a good sell now, and in case it falls at least 15-20%, then this can become a good buy.
That's a fair point. Hey, I'm actually curious, Mr. Chokalingam. Right now, a lot of people are talking about the pharma space, and we saw Cipla today, and for me, it was a hard decision to ask you about Cipla or Larsen & Toubro, and I chose Larsen & Toubro. But while we're at it, why don't we also talk about Cipla? In the pharmaceutical space, do you like this particular counter? And seemingly, anytime there is news on an oncology-related development, the stock reacts very strongly. Are you looking at pharmaceutical companies that have options or products in the oncology space very closely?
Certainly. I mean, Cipla looks good, no doubt about it. In fact, a lot of, if you look at the Nifty and the Sensex basket, the constituents, there are a lot of segments are facing what I call single-digit growth syndrome. either in value term or revenue term, the growth is now only single digit, whether you take IT in dollar term or cement volume, FMCG volume. So therefore, the pharma still gives a lot of comfort and also exposure to US and possible rupee depreciation further. All these would augur well. So from that perspective, but if you ask me on oncology perspective, yes, they are good in Cipla as well as Dr. Reddy. But investors should keep in mind one fact that ultimately the government is not going to keep quiet if margins are very big in oncology. So that structurally the pricing and realization have to keep coming down. So one should keep that in mind. Therefore, try to buy something which is relatively cheaper. So according to me, Dr. Reddy is one of the best pharma stocks in the large cap space.
All right. And I would assume that is a buy. You want to also tell us what your target is on Dr. Reddy's, Mr. Choklinga?
From here, at least 25% is very much possible. A lot of cash, a lot of consultation happened. So around 25% from here it is possible.
Okay, fine. All right. Stock is currently trading about 0.7% higher. The next question is in the banking space and on Bandhan Bank. And Kishore is writing in. He has wished us all a happy Diwali. And Kishore, wish you and your family a very, very happy Diwali as well. He's bought at a price of 203 rupees per share. And he hasn't really specified whether he's going to hold for the long term or not. But Ayush, based on the charts, what would you suggest that he do?
Well, looking at the stock of Bandhan Bank, it is continuously trading in the downward sloping channel. But the thing is, the only support point here is at 165, which is approximately 15 points more from here. If the person can hold it till that time, I think it should hold. Then he might get some profit in the near future. And if someone wants to keep a stop loss for this stock, then it would be at around 175.
Okay, 175 is what you should look at Bandhan Bank. We've got a question from Ray, who's writing in from Bengaluru, and he's asking about the Worry Energies stock. And this is so he's gotten at an IPO issue price of 1,503, and he's wondering whether it's a sell or a hold at the current market price, which is 2,600 plus. What is the 1 year price outlook if you have that? Mr. Choklingam, have you looked at this counter? It's up about 8% in trade right now. Would you suggest a hold, or would you say book profits and move out?
In fact, we suggested subscribe to the issue, but on listing price, we gave a sell call, and definitely it has gone up further. I believe it's a good sell because let us not ignore the valuation multiple, which is highly stretched. And also, second insight, one should not forget, all over the world, the prices of renewable energy, capital goods and components, they are on the downtrend. And second, the competition is getting intensified. Every industrial house, every big company thinking of getting into, already they got into this, and many more are coming into this industry. So definitely the margin pressure would be there, and this is a very good price to sell in my view.
Okay, yeah, that's a fair point. All right. And you've been talking, Mr. Choklingam, about valuations for some time now. I remember even 6 months back, you were a little uncomfortable with some of the moves and some of the stocks that were going up. And right enough, over the last month, we've seen sharp cracks in a few of those stocks. So good call when you made it. I'm going to come back to you on this next one because Nykaa is the counter that we're talking about. And we've spoken to quite a few very big voices in the market, and they've said that these new age companies, some of them are great prospects from the long-term perspective. Satya has already bought, I believe, in Nykaa, and he's wondering, at least for the next year, till next Diwali, is this something that he can hold on to? Mr. Choklingam, on the fundamentals, is this something that you like?
Very difficult, very, very difficult. I think it is, I'm sure the P is more than 500-600. Of course, I would tell the investors I will go wrong in such stocks because I don't compromise enormously on the valuation multiple, and it doesn't have any valuation comfort at all. But if you are having a trading mindset and if you can take a speculative risk, then one may hold it. But fundamentally, it's a great sell.
Okay, it's a great sell on the fundamentals. Let's see if Ayush agrees on the technicals. Ayush, I don't know if he's bought, but assuming he has, and if he has not bought, would you suggest a fresh entry? If he has bought, what should he do with it? Should he sell at this point?
So let's talk about if he has bought it already. So I would recommend him to hold it with the stop loss. Although stop loss would be at around 160 levels, although it's a bigger stop loss, but we can see a higher levels. It has already given a fresh breakout, and now it is retesting that breakout. So I think it will hold that breakout, and we'll see a new high here as well. So I can expect minimum 220 to 230 levels very soon. So definitely should hold it.
All right. So technical is a slightly different view. On the fundamentals, it is a sell, though. We've got Sam from Chennai who's wishing us a happy Diwali. Sam, wish you and your family the same. He's asking about IDFC First Bank. He says that he's a long-term investor and he's bought at levels of 80 or, very close to that level. He's got 2,000 shares. It's quite a considerable holding. He's seeing a loss right now because the stock has given up a bit. And if I remember correctly, Mr. Chocklingam, the earnings were a little bit muted. Not too much to write home about. The last earnings, the second quarter. Is that something that you saw as well? And what would you advise him to do?
In fact, we have consistently maintained a sell call, but now it has crashed very badly. Definitely, 80 could be fair price. If somebody is losing heavily, one can hold. But otherwise, let me tell you that the banking sector is going through several headwinds. The growth in credit is expected to slow down to 12% from 18%. And then you have issues on, credit deposit ratio, liquidity ratio, then the headwind of making more provision for expected credit loss. So there are so many. And this bank has got a huge, the paid-up capital base, and that base reduce the credit growth in the industry. I doubt whether this can become a wealth creator, but certainly, if somebody is losing heavily, 75, 80 rupees could be most optimistic target price.
Okay, all right. So Farhan has got this next question. He's asking about Cochin Shipyard, which he's bought at 1700 levels. Let's pull up the chart and see where it's at. He's losing ground. He's bought 30 shares and he's looking for a 1-year perspective on this particular counter. Ayush, on the technicals, we've seen quite a few stocks in this space give up a little bit of ground in the recent past. And what would you suggest that he should do with Cochin Shipyard, which he's bought at slightly elevated levels?
Looking at the charts of Cochin Shipyard, we have seen some selling pressure from the higher level. Although the base formation is not confirmed yet, if someone is already holding, I would recommend a trailing stop loss here. The trailing stop loss is at around 1470 levels. If that is broken, I would recommend to exit and make an entry at around 1100, 1150 if we get it that time.
Okay, all right. PJ Sharma and in fact quite a few other people also have questions on Reliance Industries. Sharad Kothari from Mumbai. He's pointing out that it has gone to Lok Sabha elections low. I'm not sure about that. But in fact, if we can pull up the year-to-date chart, we can see. Remember, it is trading ex-bonus this week. And it is trading at 1,335. This year, it's more or less done. I mean, it's pretty much unchanged if you look at it from the start of the year. And it has, in fact, given up quite a bit of ground from the high point. Mr. Chocklingam, on the fundamentals, though, the O2C business is where the pressure has been, with margins contracting quite sharply. But some people are pointing out that the gross refining margins may actually have bottomed out and things will look better in the second half. Do you think that that is the case? And would you add more at this point, considering that Reliance Industries, even as it stands right now, has the Geo business and the retail business to account for?
Yes, definitely. We have a very aggressive buy at this rate after the stock has fallen almost 17-18% from the 52-week high, which was really surprising to us. Agree with you. The oil to chemical business is having a stress. It might not have bottomed out. It may go through a little more because European economy is still growing at 0.2% or 0.4%, which is a major driving force behind all these petrochemicals and other chemicals. However, we all know the management itself has guided for doubling the value. Of course, they have not given the time frame, but I believe that there is a possibility of doubling the value in 3 to 4 years. And they already created a value unlocking from Geofinance. So next, I am expecting strongly from digital services. So I believe digital services, retail services division will create a tremendous value unlocking, and therefore I would have a strong buy on Reliance Industry at current price.
Okay, it's a strong buy, and remember, it's one of the reasons why the Nifty 50 has underperformed in the recent past. Quite a bit of a crack over the last month and a half or so. Let's talk about Vedanta and Nalco, and in fact also Hindustan Zinc. All three of them, CP Kumar is wondering whether to buy into any of these counters. I guess, Ayush, it depends on what your outlook is on the underlying and what you think about base metal prices, because there is a certain amount of cyclicality associated with these counters. Would you buy any one of these?
Well, out of these three, I would recommend buying Hindustan Zinc because we have seen some high profit booking from 800 levels. And due to the Fibonacci retracement, it has retested very well at the golden ratio of 61.8, and it has already given a breakout. And the closing was above that. So I would recommend buying Hindustan Zinc in current levels. So I think minimum targets we're expecting here is 610. And if someone wants to keep a stop loss here, the stop loss would be at around 540.
Okay. Protean eGov Technologies is the counter that we're talking about next, and Sanjeevi from Hyderabad is asking about this. Interesting trivia here. Protean is actually something that is derived from Greek mythology, and it relates to Proteus, who was the sea god, known to change his shape at will. Not related to what the company does, I'm sure. But Mr. Chokalingam, have you looked at Protean eGov? Do you like the counter? If you bought at price of 2,086, would you hold on?
I would not have bought such stocks, first of all.
Okay.
And I don't have comfort. I'm just looking at the fundamentals. Even after the fall, I don't have valuation comfort in this stock.
Okay, so you would exit. I'm pretty sure that is a view you would exit, right?
Yes, definitely.
Okay. All right. The next question is on Samman Capital, which is the erstwhile India Bulls Housing Finance, as pointed out by Mr. D. Mazumdar, who's writing in from Rourkela in Odisha. His buy price is 154 and he's got a 3-year outlook. He's incurring a small loss at this juncture. Mr. Chokalingam, any view on Samman?
See, along with the banks, even NBFCs are going through a difficult time in terms of growth slowdown, making provision for unsecured loans. So I would. And also this particular company has been going through a lot of stress in various forms. So I would suggest that, replace it with, either a bank like a Kotak or Axis, or, in the small and mid cap, one can look at a bank like a Karnataka Bank, which is consistently doing well for last 100 years. And the disclosure is that we have personally invested in Karnataka Bank.
Karnataka Bank is a buy from the perspective of Mr. Chokalingam. 3 to 6 month view is being sought on BEL. And Leena from Mumbai is asking this question. She's not bought she's not bought yet, but she's wondering what level she can buy at. It's at 286 or thereabouts. Ayush, would you suggest a fresh buy?
Well, stock has given a fresh breakout here, but the bigger breakout comes above 295 levels. So I would recommend to wait at those levels, like 10 rupees more from here. That would be a confirmation of breakout, and minimum targets we're expecting is 340 here.
Okay. Krishna Khosla has written in, he's bought Suzlon at the extremely attractive price of 9.67 per share. He's got 450 shares. The stock is currently trading at 67, having given up a little bit of ground. But Mr. Chokalingam, this is arguably one of the best performers over the last 12 months. Would you hold on based on the fundamentals?
I would say, as I said, in the renewable space, the competition is getting intensified. So the only risk to my view is that if, any big group acquires at the fancy valuation, then I may go wrong. But otherwise, standalone, it is going to struggle because the competition is getting increased. And it's a multi-bagger now, those who were lucky to buy in the last 3-5 years. But those who bought 10 years ago, still it's a big loss. But still for both of them, I would give a sell call on the stock now.
Okay, and if you're in the green, you're making quite a bit of money right now. Mr. Chokalingam, one last view on Hyundai, and I'm saying it like the Indians do. Nitin is asking whether or not he should buy it at this point. What's the view?
It's a great company for long term. There is no doubt at all. Along with the Maruti, it will do quite well in the long term. But the only problem is suddenly the passenger vehicle segment is going through, a lot of headwind. Even the SUV, which was driving the automobile sector in terms of strong double-digit growth, has come to poor double-digit growth. So I would not buy Hyundai Motor at current price, not even Maruti also. I would wait for at least one more quarterly results and then monthly figures of passenger vehicle sales before taking a firm view on both Hyundai Motor and Maruti Suzuki.
By the way, we have a special coverage on the automotive space and the inventories lined up for you in the big story today. So do watch out for that. Mr. Choklingam, Mr. Ayush Mehta, thank you so much for joining in and for answering all the questions that you did. Had an absolutely lovely session and wish you again a very, very happy Diwali from all of us here at NDTV Profit. And that brings us to the end of this particular edition of Ask Profit. Remember to have a safe and a very happy and prosperous Diwali. Thanks so much for tuning in.
To our Diwali party here at NDTV Profit. This is exciting, guys, because
you're at Points at Wisdom.
We have, and we have taken the conversation out of the studio and we've invited some of our friends. So great to have you here, Vikas Khimani, Mihir Vora, Pankaj Murarka. Thank you so much for joining us on this different way of celebrating Diwali. A time of fun, time of hope, time of optimism. Vikas, let me start with you. Is this Diwali seeming special to you or something where we might see a bit of challenge?
Every Diwali is great and I think so is this Diwali. I think if you see last 1 year has been a great year from market's perspective. All of us are far more richer, far more happier. Indian economy is doing very well. So I think this festive mood is, I think, by and large very, very good. And that's how I think we all should celebrate. Of course, you know, the recent correction, consolidation is all part of the game. I don't think it's anything disrupting the story of India So I continue to believe in India, great story. So yeah, we should not worry about it. I think we should continue to celebrate, and I see no reason. Of course, there will be times of correction, consolidation as part of it's a course, par for the course, happens in every market, and we will see that. But India is one of the best wealth creation story over next 1 decade. That will continue, and that's how we should approach even this Diwali.
Yeah, and what better time to talk about wealth creation than during this festival? Mihir, what is the formula of wealth creation we need to think about in this Samvat?
Look, as Vikas mentioned, Diwali always starts with hope. And India has never disappointed, hopefuls and the positive people. So I always think that, given the decadal story that we have, it's always good to start with hope. And the point is that the way to create wealth is just to have belief in what you're doing, right? And if you believe in India, then you will stay invested. If you don't believe in India, you will not stay invested. You'll be a trader. But if you believe in the long-term India story and you will stay invested for a long period of time, Diwali, Christmas, next Diwali, you'll continue to make wealth.
Traders watching will be saying, but we also believe in India. We still trade.
Absolutely.
The time horizon could be different.
The time horizons are different, but as long as they are trading on the long side, it's fine, I guess.
Pankaj, how are you feeling? Last year and this year has been phenomenal. Everyone is richer, like Vikas said. And in fact, me drew it to my notice that for 9 years, we haven't seen a correction. Calendar returns every year have been positive. So we're sitting in a good place. This time around, of course, the economy is supportive. China, luckily, in some ways, is not much of a competition as the way I'd like to look at it structurally. Are you excited, confident that the next year is going to be as great as the year behind us?
I'm a slightly more medium-term thinker. I believe India is not a decadal story, but a story over the next 25 years.
A decade is short term.
So, and I think just like our economy will make a new high because the economy is at all-time high in terms of size every Diwali over the next 25 years because India is going to be a secular growth story. I don't see any reason why the index should not make a new high. Every Diwali should be a new high for the index. So I think it's a very given thing that, India is the story in the world outside of US, any equity markets. The only story or the only secular growth story in the world today is India.
They've called it the fastest growing large economy, right? That's the phrase they use for India now.
So we are the only secular growth story out there in the world.
Just one quick one on that. I know, this is great. We all talk about 25 years, but hey, we're all middle life now, right? I'd like to enjoy this money as opposed to just leave it for my kids. Let's talk, and I know a structural bull run is made up of many, many small cycles as well. Do you feel truly medium term it's going to be a good cycle? Because somewhere I feel like we borrowed some returns in the future. Maybe Vikas will, I know, say that's not true, but I'm going to talk about next 1 year.
That could happen at the index level, but my experience of investing in India over the last 26 years, and some point of time I used to run a large fund managing about $5 billion US. In my 26 years, I've always had more ideas than the money at my disposal. You give me $5 billion tomorrow, I can invest in the next 10 days.
Okay, more ideas than the money at your disposal.
At any point of time I've had in my career. The beauty of India is, as a growth investing that I practice, the universe or the pool of growth companies just keeps on expanding. And you're spoiled for choices. No other equity market in the world, and I have some understanding, during my Merrill days I used to do some regional and global investing, so I have some understanding of the world and of the region. No other equity market in the world gives you the kind of choice and the breadth of investing ideas that India offers. And I think the pool of growth companies in India will just keep expanding over the next 25 years. I think India is a paradise for growth investors.
We want to give some interesting data here since Pankaj mentioned this. In 2001, number of companies more than $1 billion market cap were only 20. Today we have 600 plus companies.
25 years.
Number of companies more than $10 billion were only 2. Today we have 110 companies. We had no companies more than $100 billion. Today we have 4 companies. So this is how size and scale sort of changes of a country. And I do agree with, I have often said that we are spoiled for choice.
We are lucky to be born here, right? In so
Absolutely.
many ways, because there is a home bias in some ways for us as well.
The cutoff for the small cap is now close to 30,000 crores.
Which is to large cap.
In many ways, Warren Buffett has always said, right, that you got to be lucky to be born in US at the time that he was born to create wealth. I wonder if that's true for the next 25 years for India.
It is. I mean, see, we are a product of the bull market.
What he says, the ovarian lottery.
Yeah, the
Ovarian lottery.
We are a product of India bull story.
So let's lay it out here. Now, for people who are watching this right now, let's assume they're in sync with the argument that we are in a long-term structural bull market, right? But we want to also think of what will happen over the next 12 months. Will it give more opportunities at lower levels? Is that the higher probability, even in the long run? Or do you believe from this summer to next summer, the party continues? Either, any of you. Let's start with, okay.
So my view in this is, look, we have had a great last 3-4 years from a returns perspective because of the transformation we've seen of India. 2014 to 19 or 20 period, a lot of foundational work was getting done, and then COVID happened, right? So benefit of that actually got compressed in last 4 years. So we are exceptional. So I think the only thing which investors should not do is expect same kind of returns, what we have had in the last 4 years. And when you have, and there's no doubt about it, there are pockets of excesses in markets for sure, right? Markets have kind of swung on the other side, and partly it has got corrected in the recent times. So I think first thing in my opinion investors should do is taper down the expectations. I think we are right now in a phase where probably maybe next 3 to 6 months we will be in a tight range to consolidation phase. Maybe we will be in a
And much required,
much
right?
required, right? 22 to 25, 26,000 kind of narrow range we will be there in terms of Nifty. But whenever markets move in this range, right, you get great opportunities because stocks correct. In this period, index might remain in this range, but stocks correct 30%, 40%. Already we have seen many of them.
So have you
correcting.
gone shopping in the last 1 week?
No, so do not have
Bargain
to be in a
hunting?
rush. What I'm saying, see, today it has just started. The consolidation phase has just started, right? So you don't have a rush. So you basically keep your shopping list ready. You keep your ideas list ready. You keep your company's list ready, right? And like Pankaj said, I again completely agree that there are always high conviction ideas where you think that 5 years down the line, will you make money? Answer is yes. Only thing you have to just put up with the short-term volatility in short term, which is fine. So I think given the nature, I feel that of course from this year to next year we will make positive return for sure. I mean, at least I feel that we will probably make 14-15% return unless some
14-15% return from this year to next year.
Unless some Six Sigma happens. But I think probably it will come in a sort of a step. I mean, it's sort of a phase where you could see painful phase. You could see the mood right now is in some sort of consolidation range. And there are a few events lined up. So I think even in that context, I would say that keep the expectation low is, in my opinion, is the mantra.
Pankaj, just on the point of the events, and I'll take on from there. What are the big events which you think can really move the needle? Because India has, for some time now, not necessarily been following global cues. So far on the upside, and now on the downside. We're not responding as positively as maybe global markets. Do you see that continuing?
That might just continue for a few more weeks because the fact is, for the last 2 years, India was the only market which was performing amongst the emerging markets, and India is an outlier economy. Now that you're seeing the US getting into a rate cut cycle, so essentially you're seeing more money come to emerging markets, and there are markets which are trading at 50-60% discount to where India is, so people are trading those short-term tactical asset reallocations in that sense. But I don't see that as a concern from a next 1 year perspective. I think eventually money will flow into India because there is a consensus now globally that India is only secular growth story. Any rebound you have in China or any of the regional markets is more a cyclical rebound, but the secular growth story is out here in India.
But still 90,000 crores of cash pulled out by FIs in the month of October itself. Any of you, I mean, why that?
That reflects the depth of the market that we could absorb all of that.
Or
so India has become a large
positively as well. Yes.
Now it's a market where you can put in, you can take money $10 billion out and not yet, have a meaningful impact on the market. That shows that these markets have matured and there's depth to the market. We are now the 4th largest market cap in the world.
So how long until the let's go back to China phase ends? What do you guys think? Or is there a lot more left in the, we were underweight China, let's now make do. Is there more of that pain left?
So I think two things should be seen. See, whenever Fed raises interest rates, money gets pulled out of emerging markets. So last 3-4 years, we were seeing a lot of that pulling out happening across all emerging markets, so did India. And as that rate peaked out and started looking down, or started the coming down, we started seeing money flow happening, right? And that's where we saw flow happening. And in that situation, India was overweight. And as China stories kind of looking for a tactical bounce back. Now, I don't understand China as well as, I do understand
India.
China
understands China as well. So that's okay.
So I think to that extent, you might see, tactical allocation happening. But eventually, I am telling you, if foreigners were to become in equal weight on India, over the next 10 years, we will receive at least, if not more, $1.2 to $1.3 trillion of inflows over the next 10 years. Now, if you look at that journey, tactical short-term flows can come and, that nobody knows and nobody can predict. But structurally speaking, there is no way, in my opinion, any country, any global investor can afford to ignore India. If you remember, there was a time when Japanese economic miracle happened between 65 to 89. There used to be Asia funds. And then Japan became a separate asset class. So people started calling Asia ex-Japan.
Yeah.
I see a situation where you people start seeing India as a separate asset class. Whatever emerging market ex-India, Asia ex-India will happen. So I think that is the sort of, whether it is 3 years, 4 years, 5 years, it will happen. Not aspiration, it will happen.
It will happen. It's just
a question of
time.
And more people realizing India's story, more people getting to know India's story.
We're definitely on the map now. But I want to ask you this, right?
Sorry, before you ask the question, China is something that kind of niggles me a lot, because people keep asking the same question on China. People will pull out of money out of India. Plus, China has had the world's dream run in economic growth from the 90s, late 80s till now. For 30 years, China has been the fastest growing economy in the world. And investors in Chinese stocks have made zero.
So that's what I want to ask you.
The point is, if in your dream phase you did not let people make money, now that you're at the peak of your demographics, you're desperate for growth, and the measures over the last few months clearly show that they are in a state of panic about growth and demographics. How are you going to make money in China when they have already passed their prime?
So we shouldn't compare ourselves to China.
Absolutely not. Absolutely not. Yeah.
Let me ask you this, right? And I think because you brought that to our notice, where we compare data, where you've had a few large cap companies 20 years ago, now the number is far bigger. Where will the growth come from? I know we talk about value in the large cap space, but the growth potential really sits in the broader markets, right? If you had to stick your neck out and pick up companies, pick up stocks, where would your bias sit? Because a large cap company can only grow that much.
Absolutely.
Or a small cap company, the world is your oyster.
So your question has the beautiful answer. Again, since we are all students of statistics and data, 15 years ago, 20 years ago, the top 100 companies with large caps used to be 82% of the market cap. Today, they are only 60%. 40% in mid and small caps, right? There are 1,100 companies with a market cap of more than 2,000 crores. And what we did, because we recently launched a small cap fund, we did a study of high growth sectors and the other sectors. Yeah. Other sectors being traditional ones like, the lending banks, the IT companies, the large cap IT, etc., utility. But if you look at all the high growth segments, like for example, say auto ancillaries or hotels or all the chemicals, infrastructure, manufacturing, real estate, which will grow faster than the rest of the economy, they form 80% of the investable universe in terms of number of stocks. Right? So if you want to be in the highest growth segments in India, you have to be in the broader market.
I have a question though. Why this feeling that large caps will not give multi-bagger returns? Because US is a classic example wherein the larger companies have actually given multi-fold returns, right? So if the large caps have valuations in your favor, can large cap investing not generate multi-fold returns?
No, I think that's a wrong impression. According to I don't agree. See, large caps will give, we've seen ICICI Bank giving 5x return, Mahindra 5x return, Tata Motors 5x return in the last 3, 4, 5 years, right?
So your portfolio is biased to large cap or broader markets?
No, see, we don't really, there's obviously product construct around each product, there's a defined criteria, but point I'm trying to tell you to Neeraj's point, that even large caps create a lot of wealth. The point I think broadly is, what even Mihir is also referring to, is that India is happening in a very broader space. Today we are spoiled for choice, and especially when India, in any economic transitions, the smaller company finds higher growth on a percentage basis for a long time, and that is what results into creating larger returns. That does not mean that larger caps will not create returns. So if larger cap hypothetically creates 15% return, smaller caps might create 20% return.
No, but which is what investors want, right? So therefore, currently, paraphrasing Samina's question to each of you, and Pankaj, I'll start with you. If you had to put in a fresh 1 lakh rupees. Sorry, I'm not insulting. I mean, you guys are doing much more.
1 lakh crore.
1 lakh. 1 lakh. 1 lakh crore.
But good question, but for our viewers, it's not a masterclass for Pankaj Murarka.
That is a large sum of money for me.
A large sum of money for anybody.
Yeah.
It could be 1 lakh for somebody,
1 lakh
1
rupees
crore
too
for
much for me.
somebody, right? How would
Very
you
difficult to
construct
manage
it?
1 lakh rupees.
How would you construct that? Large cap, mid cap, small cap, and sectoral. Yeah,
And I'm going
thematic.
to add another layer. Would you upfront it or would you stagger it?
So
Letting a proper
let me
portfolio construction.
answer that. I think in financial markets we do create products and you create products around large cap, mid cap basis, the risk curve and so on and so forth. But dispassionately looking from an investor's point of view, every day when I look through my companies or I talk to my companies or I look around what's happening in the economy, and I look from a slightly more medium term to longer term horizon, I feel extremely excited about the opportunities that I see in India and the kind of money one can make. I think the bull market, probably we're in a very early phase of this bull market in India.
Really?
I think so, absolutely. If you really ask me, the key in long-term investing is to make disproportionate returns or what I call non-linear returns.
Then it balances out eventually.
Yeah. I see there are enough number of businesses in India which will deliver non-linear growth over the next 5, 10, 15, 20 years, whatever time horizon you want to take. Yeah. Some of those spaces where this non-linear growth will emerge, to me, is one clearly technology. Technology is at a stage where it's disrupting or challenging every industry, right? From established industries like let's say automobile, ICE engine has been around for 100 years. That industry is at the cusp of a very cutting edge transition. Companies who do not transition to clean fuels, EVs, will risk their survival 10 years out. And it creates both challenges for the incumbents and opportunities for new players.
Sure.
Across each and every industry, technology is cutting through. So I see huge opportunities in technology as a sector in terms of creating non-linear growth.
But why the white bucket? Help us understand what within technology. Or
Well,
what spheres?
I'm a perma bull on tech. We've discussed this earlier in disruptive tech, and within that, the whole tech ecosystem in terms of whatever tech companies are there. I think
None of them will get listed now.
yes, absolutely.
Most of them.
And these companies are still small.
Yeah.
These companies are still. Please understand. And just relating back to, I think you made a very profound point on the large cap wealth creation in US. Large caps in India are still mid caps from a global perspective because India is a small economy. In $100 trillion of global GDP, India is 3.5% market share. India's market share will go from 3.5% to 10% over the next probably 10 years or 12 years. So our large caps are small caps from global perspective. They will become large caps from a global perspective. When US peaked in 2007, the largest bank in US, Citibank, was $1.2 trillion market cap. HDFC Bank today is at $250 billion.
No, it's big runway.
Why can't HDFC Bank? I firmly believe HDFC Bank will be a $1 trillion market cap some point of time in the next 15 years.
So you made a point about new listings. You mentioned it actually brings me to something that I want to talk about. And this is a good time. Let's talk about shopping lists now. And as IPOs come in, there is a lot of excitement about IPOs from investors, but not all of them have really hit it out of the park. Are you excited, Mihir, about the kind of listings that are lined up? Or has that excitement been tempered a bit, even as the market mood has tempered?
So I look at IPO like any other investment, frankly. It's all about the same parameter: growth, valuation, quality, etc. So we are excited about IPOs to the extent that they offer some value left on the table. If it's already fully priced, then it may be an excellent, high-quality company. But ultimately, I need to make money. So I would evaluate IPOs with a little bit of margin of safety compared to a listed company. So in the same sector, if a company is trading at a certain valuation in the listed space, I would expect at least a 20 to 30% discount in the IPO. Otherwise, there is no point in participating. So we look at it on a case-to-case basis. Having said that, as we discussed, so many private equity and VC-funded companies have emerged. Are there out there exciting companies in the unlisted space that in the next 1 to 5 years you'll see a whole host of new segments emerging. Frankly, there was one study by Bernstein, if I remember, a couple of years ago, saying that companies which did not exist say a couple of years ago by 2030 probably can be almost 5 to 10 to 12% of the market cap.
New ideas.
This is new market cap.
Yeah, so therefore the extension to Pankaj's answer, so he believes technology, and that is his core. What is your core? I mean, your key favorite to ride this India theme?
See, India is not doing core tech. But if you use tech, for example, if there are companies which are going to do work in AI processing or AI linked, modeling, etc., then that can emerge.
No, so
we already have companies. I have a listed companies today. I don't really invest in the unlisted.
So in listed, what is your favorite?
So in listed, I think the biggest thing that we are seeing is currently physical asset creation, because my firm belief is that unless we create physical assets in manufacturing, infrastructure, and real estate,
it's an old economy.
We cannot grow. We cannot grow at 7% GDP. My core assumption is that just by consumption and by services, which has been the growth driver for the last 10, 15, 20 years, we cannot grow more than 5.5% now. To grow above 7%, we will have to create manufacturing assets, infrastructure assets, real estate assets. And that's when engineering, cap goods, construction, power, defense, railways, real estate, that whole gamut has to do well, without which our deals won't be satisfied.
Pankaj, just hold on to that thought. We need to slip into a quick commercial break. We come back and continue our conversation on Diwali party. We got a whiff of some of the themes that they like. We'll expand that conversation a bit more. Stay tuned.
Back. You're watching Diwali party, and
I've moved closer to the guests.
You have, and I wonder why. Which side are you on?
No, I want to hear the ideas more carefully.
Okay, yeah, we're missing Tamana, but of course we'll come back to that in a minute. Pankaj, you mentioned you have historically loved the IT pack. This pure play IT, which was a story so far. Today, of course, and I'm just spinning this question and going to try and understand this. Would you also invest in companies that are leveraging IT for growth? Because then that universe expands even more, right?
Oh, absolutely. So one, maybe on the IT services, and just giving my anecdotal experience.
Yeah.
When Infosys hit $1 billion of revenue in 2002, we thought the IT story is peak because Infosys is already some 70,000 employees. The fact is today, after 20 years, Infosys does $18 billion of revenue. And I think Infosys is a growth company for the next 15 years.
Wow.
So, but yes, you're right. So I think IT services are growth, but I'm very excited about technology and internet companies in India.
Yeah, and also, like, for example, you said manufacturing.
Yeah, so manufacturing technology across the board.
Yeah.
It could be manufacturing tech or this. Just give you an anecdote. The largest stockbroking company in India is 15 years old, and it's a digital company. It's run by a person who's not a traditional broker. I think the largest financial company in this country will be a tech company which will not be run by a banker. 15 years old. Technology is going to challenge each and every business.
one thing everyone watching who's got kids, they should be studying engineering. This is it. Just software engineering.
Oh, absolutely.
AI.
Absolutely. Technology is going to change the world. And technology has reached an inflection point because of evolution of AI and what we are seeing kind of a thing. It's my firm belief that the AI wave over the next 10 years, which will be much bigger. The biggest wave in technology that we've seen was the internet wave in 95. The next wave over the next 10 years, in terms of what AI does to each one of us and every business, which will be far more profound and far more deeper than what internet did to the world. So anywhere in the world, you cannot not afford not to invest into technology. And the beauty is in India, we're at the heart of it.
So which companies would these be? You mentioned HDFC Bank. Clearly, you like that one. But
well, HDFC Bank is the more traditional bank, which I think
tech to grow.
Well, so as I said, I like fintechs because as I firmly believe, the largest financial sector company in India will be a tech company and not a traditional bank. And it will be run by a techie and not a banker or a traditional finance guy. Because traditional finance guys cannot think non-linear.
And the disruption can be, completely out of the blue. I mean, I think even 2 years ago, we would not have thought that Kirana shops would be complaining about quick delivery service, quick commerce, And in the last 1 month, I've read at least 5 articles about Kirana
so what both of you buy Zomato?
FMCG distributors complaining
Zomato is
I'm an owner, so I have a bias. I have a bias. Just one more data point just to put this whole thing into perspective. Today, if you look at US, tech is about 20% of the market cap. Yeah. In India, if you leave aside IT services, tech is under 1% of the market cap. I have no doubt that some of the leading companies of India, or amongst the at least 10% or 20% of the top 50 companies of India, in the next 10 or 15 years will come from technology.
So we have a tech bull here as well, right?
Oh, okay. So consensus view on
consensus view, because I want to understand IT services or tech-enabled companies or a mixture of both, or something else is your top draw. I'm asking top draws, right, to each of you.
I think, see, again, the thing is I might want to play AI, but I should have a playable play, right? So I think the thing is that you have to see, the way I see is that anything which is giving me, non-linear growth, or a very accelerated growth, I like to say. So within IT services also you can find companies which are product-oriented companies. I mean, we've been invested in a company called Newgen, which has kind of done phenomenally well, and product companies just kind of have always a J-curve kind of.